Hey, hope you're doing well. In this video, I'm going to give you my overall perspective and expectations for crypto and blockchain right now and into the future. And the reason why this is so important that you listen to this video right now is because we are so deep into the bear market, and oftentimes that is where people make the worst decisions because they are uneducated and they act emotionally. So this video is going to help you curve those emotions and hopefully formulate the proper perspective and expectations so that you can make an intelligent decision for yourself and the people that you care about. So where are we currently at? It's been absolutely crazy, and trust me, I know I've been in the investment world for a decade now. I've been full-time in crypto since 2017, and professionally, I've been full-time since 2019. I've been through, this is now my third bear market that I've actually been through in crypto. I bought Bitcoin back in 2013, sold it in 14, watched what happened in 15, aka the bear market. Then I rode the wave in 17. Once again, got killed by the bear market in 2018. And now I run multiple funds that are in this industry. We also have education companies. So I'm literally in this industry 24/7. And I've been watching this industry grow since all the way back in 2013. So I have, and it's really important to like watch it happen play by play, because when you're in the moment, you understand how things kind of operate. You can always look back and look at charts and be like, oh yeah, we'll sell the top and buy the bottom. That sounds wonderful, but that's not how it works, because there's a lot of different complexities and you don't know everything. And then you see FTX go bankrupt and BlockFi and all this stuff happening. You're like, what's going on? Okay. And what I want to do is kind of clarify some of that stuff for you just based on my, previous experience. So deep into the bear market, we usually see 3 years of a bull market, 1 year of a bear market. And it's likely based on two things: liquidity from the Federal Reserve. So are they printing money and lowering rates, or are they hiking rates and decreasing the monetary supply? That's the question that we need to be asking ourselves. And I should really say decreasing their balance sheet. And those have significant impacts, but also likely the halving cycle has a significant impact on Bitcoin and crypto, because Bitcoin makes up over 40% of all of the crypto market cap right now. And what you need to understand is where we're at right now in the bear market. We are at the very bottom of typically where we see the bottom happen. So we haven't quite had an 4 to 86% drawdown. We're well into the 70 percentile type of a drawdown, but we are on a time frame basis. We're at and past actually now past the 12-month mark of where we would typically have a bear market bottom. And there's a lot of indicators on chain and technicals that are showing that we are likely at a bottom or very close to it. Now, the question you need to ask yourself is, would I care about buying now at 16,000 or 12,000 if I believe that Bitcoin's going to 200,000 in the future? Probably not. So those are the kind of the questions you need to be asking yourself if you want to invest right now, or if you want to try to time the perfect bottom in the next 3 weeks, if that even ever happens. And yes, the macro landscape is different. It's always going to be different from the previous macro landscape of the previous bear markets. And what you got to realize is when you're talking to everyone, you probably just got home from the holidays, you were talking to everyone at Thanksgiving and at Christmas or whatever holiday you may celebrate. And a lot of people that aren't educated, that aren't in this industry, all they see is the news. They see the fraud and scandal of FTX. They see BlockFi, Celsius, Voyager, all these companies going bankrupt that over-leveraged and acted irresponsibly. They see Three O's Capital go to zero. They see Alameda go to zero. And what they don't understand is most of those, the reason why those things happen, which by the way, is very typical of very early stage industries. When you have extreme growth and extreme volatility, it makes it very difficult for businesses to operate in that extreme volatility and extreme growth. Yes, it does bring a lot of new companies into it, but it does clear the bad actors out of that industry as well. So I'm not surprised whatsoever. And the same thing will happen with a lot of these cryptocurrencies, and a lot of them are unregulated securities that you're going to see not make it into the next bull market. So that should be to be expected. And if you understand what happened during the internet bubble, when the internet came out, which by the way, our adoption rates are right on track with where the internet was, the same thing happened during the internet bubble. Bunch of companies came out. Everything that was whatever.com was worth way too much money. Same thing with crypto. All this, the technology and these coins that come out, a lot of them are way overvalued for what they do and what they're likely to do. Okay. And the same thing happened back then. And a lot of those companies went under, and a few of them did extremely well. In fact, if you've watched some of my previous videos, we talked about Amazon and how Jeff Bezos came in on an interview and said, yeah, during the bubble, the internet bubble, the shares of Amazon kept going down, but I saw the fundamentals growing as far as the amount of, customers using it, the amount of volume of sales, amount of new products, all that stuff, all that was increasing, but our share price was going down. And I knew that this was a recipe for a really large appreciation in the value of our stock because the fundamentals were not priced in. And that is exactly what is happening right now, in my personal opinion, is there is a lot of fundamentals, which is exactly what I'm going to get into right now. So if you're a short-term trader and you try to, time every bottom and time every top, and you're really worried about your return in the next 6 months, the next 3 months, this video isn't for you. And I will tell you this straight up, because I want to, hopefully foster the right mindset for you, is the people that are extremely successful. It doesn't matter if we're talking about, if we're talking about their health, if we're talking about their business, if we're talking about their investments, their relationships, they think and act long term. The shorter your time horizon, the more poor and broke you're going to be. The longer your time horizon, and the better strategically that you plan for these long-term goals. And if we're talking about investments, appreciation or changes in cycles, changes in the economy, changes in business, changes in technology, the more that you prepare and act and set yourself up for long-term success, the more success you're going to have in life. And again, it doesn't matter if we're talking about investments, business, relationships, whatever it may be. I can tell you the people, and I talk to billionaires all the time. I talk to ultra successful people all the time, every week, actually. And I can tell you the people that are very successful think and act long term. So if you're that type of person that is always worried about the short term and where the price is going and blah, 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 you need to, yes, do I operate to some extent in my portfolio on a shorter term basis? Absolutely. Maybe 10, maybe 20% of my portfolio. But the majority of my portfolio is long term because I know I'm not smarter than the rest of the market. I can't time the perfect tops and bottoms, and I'm also going to be on this earth for decades to come. So I need to plan accordingly, right? Why are you setting up your portfolio to win over the next 30 days? Why don't you set up your portfolio to win over the next 5, 10, 20 years if you think you're going to be alive that long? Okay? So those are the questions, and that's the first thing I want to state is you got to start thinking long term. If you're going to be on this rock for longer than a decade, why don't you start planning for it? All right. And when it comes to long-term investing in particular, you need to be making your investments based on fundamentals. And there's two different areas of fundamentals that I want to talk about, which is first and foremost, we'll talk about utility. All right. This is similar to the internet bubble, right? All these companies, we knew, holy crap, pets.com, we can order pet supplies online. Wow, that is a big use case. Amazon, we can order books online. Holy crap, I can be sitting on my couch ordering a book. That could be a big deal. Did we know that was going to evolve? I just ordered Uber Eats. I got food delivered here in 25 minutes. I got a chicken wrap, right? Did we know that we could have groceries, anything that you want delivered directly to you in an instant? Did we know that you're going to be able to watch this video on YouTube and be able to consume it, engage with it, like it, share it, all that stuff? No, we didn't. So there's a lot of things that you're not going to be able to project. But in the early stages of an industry growing, you can see potential and you can see early stage utility. And there's a few pieces of utility that I think are really important and worth noting. And by the way, a lot of crypto, probably 98%, has zero utility, is stupid, and will probably do nothing over the next decade. So I'll first and foremost say that there's over 20,000 coins. Most of them are garbage. There's a few that I think are going to do very well. And there's a few use cases that I think are going to be very, very revolutionary to businesses and consumers over the next couple decades, which is, we'll start with the first one, which is DeFi. Decentralized finance, I think, is going to be very, very big. If we were to just look at all the inefficiencies of the dinosaur banking industry, it is pretty ridiculous. They charge right around $30 billion a year for people to have bank accounts. If you withdraw too much money, you have to pay $10 a month to have a bank account. All these little fees that they tack on, they make $30 billion a year. Not to mention all of the remittances, right? So if Pablo comes to the United States from Mexico, he works here, works very hard, wants to send money back to his family. Why is he dealing with 12 intermediaries and losing 30% of his value that he's trying to transfer home to his family? How does that make any sense? It's 2022. We now have blockchain technology that solves that inefficiency, that removes all of these intermediaries, clipping off 3 to 5% from a simple transaction. Okay. It also makes it operate way, way, way more efficiently. Why are we in 2022 and I can't send a wire on the weekends? I'm really confused. How is that still a thing? I cannot, and then I got to rush a wire before 4 p.m. or the wire transfer team can't mark it and allow for the wire to go out. I mean, it's pretty ridiculous, not to mention all the inefficiencies with lending. I think lending is going to be revolutionized. We're already starting to see that in DeFi platforms. We've seen exchanges, decentralized exchanges such as Uniswap, already have more than $1 trillion in volume and facilitate hundreds of millions, if not billions of dollars in lending as well, because you can borrow from these different DeFi platforms, and most of them are secured lending, but that is going to evolve as time goes on. Not to mention payments, right? Yes, we have the US dollar. All of these countries, the United States, China, major countries are coming out with their own CBDCs, central bank digital currencies. They are currencies that operate on a blockchain to make the transfer of value more efficient. But people worry, hey man, is that going to remove the use case for crypto? No, it's going to further accelerate it because it shows that the technology is so good that literally the most strong private corporation, which by the way, the Federal Reserve is a private corporation, is using the technology to further the growth of the economy. So it just goes to show you that. And the whole point of cryptocurrency is to hold your own custody and to remove counterparty risk. And obviously you have counterparty risk if you're dealing with a central government. So it actually enhances the use for cryptocurrency and blockchain and just further proves that it is here to stay. And I will also say this as well. If you haven't been watching every video on my channel, specifically one in June, where I talked about how the traditional banking system and payment system is changing. The payment railroads are changing from the SWIFT system to ISO 222, which is ISO 20022. Okay. And if you look this up, it's the transition from the old SWIFT banking system, where it's an absolute dinosaur, over to ISO 222, which is just a new language the banks use to communicate, which, by the way, is already being implemented. It just started last month and is going to be executed on and fully switched into ISO from the SWIFT system over the next 2 to 3 years. And that is going to completely change banking and payments. And also there's a few blockchains that are already approved, such as Stellar, Lumens, and Ripple. And there's other blockchains like Cardano and Quant and Algorand and XDC and a few others that are being considered or very, very close to being approved. So going to be absolutely massive for payments. And again, this is not my own personal opinion. This is happening right before your eyes on the use of DeFi. Okay. Other things, store of value. What's really unfair and what a lot of people don't think about is here in the United States, we are so lucky that we only have 9% inflation a year right now, which kind of sounds crazy, but they purposely aim to inflate the value of the dollar, which debases. It's a silent tax that erodes your wealth. All right. And while that sucks and it happens, and that's just how, the 50-year experiment has played out since we've got off the gold standard 50 years ago. The crazy thing is, can you imagine working for money? Okay. And you're living in Zimbabwe and you work for this money, and then next thing you know, you have 300% inflation. You could literally have a 280% return in the stock market, but you actually lost value because there was 300% inflation in the year. And that's not even a joke. That literally happened last year. So that is exactly what other countries are dealing with. And Zimbabwe is absolutely somewhat of an outlier, but there's a lot of other countries that are 150, 120, 80, 70, 50% inflation. A lot. And I'm not even just exaggerating that. Even G20 countries are having multiple double digit, if not triple digit inflation rates, which is really sad. Okay. And that is likely not going to get better. Is there any reason why it would just turn around? No. It's not going to just turn around. It's going to continue to get worse because our governments and central banks are addicted to the money printer, because that solves every little issue. It short term solves every little issue, but long term creates a worse and worse problem. So is there a reason that we would want something that is decentralized and we can actually predict its supply? Probably. Would it make sense to have an asset that anyone could invest into from anywhere in the world? Okay. And be able to invest into an asset where we know for 100% that there is no central party that is dictating the supply of that asset, and we can see the schedule and we can see everything verified on an open public ledger. Would that be potentially valuable? Probably. That's exactly what's happening with Bitcoin. So a lot of people overseas and other countries and developing countries that have ridiculously high inflation rates, where are they to store their wealth? How are they supposed to ever have a decent shot at life and a decent shot at helping their kids be successful if every dollar they work for is getting devalued at an exponential rate? Very sad, and that's exactly what a lot of, specifically Bitcoin is likely to solve. And then also there's specific other projects that are building the financial infrastructure in these other developing countries so that they have an opportunity, not to mention all the other things that you can put, titles of houses on top of, the blockchain to actually verify that, the other countries have issues where, you get a graduate degree, but guess what? That was just printed off the internet on a piece of paper. And now that person that you're hiring, that you think has a master's degree in biochemistry, they just printed that off the internet and they're handing that to you. And you can't verify that because there's no accountability in their system. And that can all be reversed and put on top of the blockchain and build proper infrastructure for these developing countries that have a lot of those types of issues. So there's a lot of things that people in the United States and other developed countries do not think about, where this technology is going to be a really, really big deal, okay? Tokenization, all right? Big deal, okay? This is tokenizing regular assets. So the building that I'm in, we could put a bunch of NFTs on this building, okay? 1 million different people could own 1 million different tokens that represent the value of this building, and we could pass through the net operating income through the smart contract to all the token holders without waiting and having all these, accounting departments doing all this nonsense, transferring all the money. Oh, it's a weekend, we can't transfer it then. There's so many inefficiencies with, first of all, the decentralized ownership of assets, but also just being able to transact quicker. The World Economic Forum has gotten together. There's multiple interviews. You can go look up the World Economic Forum talking about tokenization, many different use cases that they specifically talk about that are likely to happen. And then also this interview about BlackRock, which we're going to talk about in another video. But BlackRock CEO, Larry Fink, which they're the $10 trillion asset manager, just said that this industry, we're likely to see a lot of companies go bankrupt and a lot of cryptocurrencies go to zero. But we believe there's going to be a massive growth in this industry, and specifically tokenization of assets. And who better to say that than the largest asset manager, BlackRock, with 10 trillion under management. All right, I think it's 8 trillion because of the dip recently this year. But regardless, they're the largest asset manager saying that assets are going to be tokenized on top of blockchains. Okay, so that, are you going to listen to your Uncle Jerry at Thanksgiving dinner talk about how everything is a scam, or are you going to listen to the people that actually control the world? You let me know below. Okay, Web 3. All right, so we started with Web 1. the Web3 thing is still a lot to play out. All right. And there's a lot of development and a ton of VC money. I'm talking tens of billions of dollars that are going into Web3 development right now, and did last year. Actually, there's about 5% of VC capital went into the blockchain industry, and that was over $30 billion last year. Okay. And it's still going in, not at the same rate as last year, but regardless, a lot of that's going into the Web3 sector within blockchain and crypto. And what was Web 1? Web 1 was being able to read information and consume information online. So you could go to a website and you could read about XYZ topic. Web 2 was Instagram, Snapchat, Facebook, YouTube, where you could then consume the information, but you could also share the information. So this is like kind of the new creator economy, where now you and I can go share information. Web 3 is all of those things, but now you own your own data and content that you're producing. So now you can consume the information, you can share the information, but instead of Meta and YouTube owning all of your data and controlling all your content and censoring you because they don't like your beliefs, well, now Web3 is coming along, where these applications are built on top of public ledgers and public blockchains. All right. And they could be private blockchains, but the whole purpose of Web3 is to give the power back to the users. And that is exactly what is being developed right now. And I think that we see a big shift into the future, into Web3 and artificial intelligence as well, which is, a whole different story. And then just the adoption. So that's the first piece. Like, that's a few use cases within inside of this industry. So when anyone says, well, what's the utility? You could go show them this video, or you can go do further research. And that is a few different sectors, again, adopt the Web3 economy that I just mentioned, tokenization, store of value, and DeFi. Those are 4 different things, not to mention, gaming and all. I could go into probably another 3 or 4 that are likely to do pretty well, but those are like my top 4 that I think are like very, very good probability that we see those things being meaningful in business and just in our lives in general. Okay. The adoption too. So whenever you're at the bottom of the bear market trying to figure out, hey, is this something I want to invest in? Is this something that I believe in? I don't know, blah, blah, blah. Don't listen again to your Uncle Jerry at Thanksgiving. Okay. Just you can hear him, but don't listen to him, because if they're not intelligent and they haven't studied this industry, they're not very good at projecting, future technologies. Probably they're not the person you want to listen to. Who do you want to listen to? Not even me. You don't even want to listen to me. You don't want to listen to random YouTubers. What you want to do is you want to see, where is the big money going? Okay. Where are the trillions of dollars going? And where are these massive companies, the companies that, by the way, control the world, where are they putting their time, energy, and effort? Okay, because they are not going to make big moves into an industry if they don't think that it's going to grow, because that is a significant opportunity cost for their capital, for their resources, for their time, for their energy, the risk of doing things improperly and getting massive fines, of having unregulated securities that they're investing in or promoting. Again, massive fines, right? So they're not going to be moving into something that they don't think is going to grow into the future. So the question is, what has been the adoption over the last 2 years? Okay, I've talked about this a lot, especially in my shorter form content, but it has been insane. And you don't realize it unless you've been in this industry for over 5 years, because the last 2 years, and specifically the last 12 months, as all the prices have been going down, guess what's been happening? The fundamentals have been growing exponentially. And what type of fundamentals am I talking about? The use cases. Yep. But more importantly, the adoption. Where is the big money going? Okay. I could go into this, and this is a whole separate video, but like, for example, we've seen like Stripe and Meta and Nike and Starbucks all partner with, Polygon to release NFTs for their different apps, for their consumers, for their communities. We're seeing even the previous president, Donald Trump, just released his NFT collection that has a use case of like, oh yeah, you can have dinner with him. You can be a part of a membership. You can do, right? So we're actually seeing different types of use cases like that, which by the way, I think NFTs are going to be huge on a membership and ticket utility basis. And there's a lot of different use cases that NFTs can have, which would be a whole nother video. But even more importantly, yes, those are major companies, billion-dollar companies that control information, money, data, right? Those are all really important. AWS, Amazon Web Services, they're running Ethereum nodes. They're supporting blockchain developers. They're hiring blockchain developers. But more importantly, the people that control all of the money, BlackRock, partner with Coinbase, release Bitcoin trading to their institutional clients. Citadel, Schwab, and Fidelity partnered on an exchange called NDX. They're releasing their own exchange. There's over 20 insurance companies that either invest into blockchain or they hold Bitcoin on their balance sheets. Okay, Harvard, Yale, Brown, they have Bitcoin in their endowments. The list goes on and on and on. Public companies like Tesla, MicroStrategy, actually holding on to Bitcoin in their reserves as a store of value. We've seen 2 countries now using Bitcoin as payments and in a non-taxable way, so you can actually use it as a typical currency. So we're seeing these things happen right before our eyes. These are not small moves. This is not something that you just blink at and be like, oh yeah, that's cool that just happened. Oh yeah, they're gonna do that. Like these are companies that control tens and tens and tens of millions. Just Citadel, Schwab, and Fidelity, they have over 60 million clients, and I think it's like 14 trillion under management across all 3 of those companies combined. So like these are massive companies that are making moves into it. And actually Fidelity just opened up Bitcoin trading to their clients as well, I think like a week and a half ago. So like the list goes on and on and on, and this could be a whole nother separate video, but we have never seen these things happen. When in 2018, when the bear market happened, there was a common practice and actually a decent argument to be like, hey, is this industry ever even going to come back? And that was a big question, is this actually ever going to be a thing? And we didn't know. Okay. And now we know. I mean, yes, there's always a small percentage that an industry goes under, but if you look at all of the money, time, energy, effort from literally the people and companies that control the world, and like I mentioned earlier, the central banks literally creating their own currencies. I mean, what other proof do you need that this technology is not going away? It's pretty unbelievable. And the last thing I'll say is, I mean, one of the major things that you would want to see in adoption is you would want to see an early stage industry rapidly growing, exponential. There's a bunch of problems with, the bank, companies going bankrupt, over leveraging, funds going under, blah, 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 right? It's a lot of nonsense, and it does suck, and it does, damage consumer confidence and investor confidence in the short term. Long term, the fundamentals of the adoption of the companies and the utility and the use cases that I just talked about will be priced in. Long term, that stuff gets priced in. Okay, short term, that's all emotional price action. Okay, but long term fundamentals get priced in. And the most important thing that I was actually hoping was going to line up was that we see a pretty large bear market, which we're 12, 13 months into one right now. Seen many companies go bankrupt, which, by the way, every time a company goes bankrupt, I'm like, we're getting closer to the bottom. Let's buy some more, make the buy limits larger. That's the way that I think, but retail would probably be like, let me sell everything, right? So it's all about your perspective, and this is why it's so important to watch a video like this, to have conviction and understand what's going on. But I was hoping that we would get a big bear market, all right? We would see the utility picking up. We would see adoption from, not from retail investors that are buying meme coins, but from institutions that are making a meaningful commitment into the industry. And simultaneously, we would see all that happening, and then we would see regulation coming. Dun, dun, dun. Regulation's a really bad thing, isn't it? No, it's actually the best possible thing that could happen. Could it have some constraints? Could there be negative things? Are CBDCs good? Probably not. Is all regulation good? Probably not. But if you're investing into this industry, if you are buying Bitcoin and you live here in the United States, you're probably not using it as a way to hedge the 300% inflation. You're probably using it for price appreciation. So what do you want to happen? You want trillions of dollars to come into the asset. Well, how does trillions of dollars come into the asset class? It doesn't come in until there is regulatory clarity, because guess what? BlackRock, Fidelity, Schwab, all these companies that control the world, they don't want to risk losing everything in billions and billions of dollars in fines to potentially have a 10x return. They don't care about the 10x, okay? They want a 1.5x, a 2x, maybe a 3x, but they want more certainty that this industry is going to be here, and they already have some certainty because obviously they wouldn't be moving into it, but they also want the regulatory clarity that decreases their biggest risk, which is regulation risk, which is coming right now. The White House already said, first of all, we already know that Bitcoin is a commodity. And why do you think Fidelity and BlackRock released Bitcoin trading to their clients? They didn't release Solana trading. They didn't release Cardano trading. They released Bitcoin trading. Why? Because that is deemed as a commodity, not as a unregistered security. So once we get clarity, is the CFTC or is the SEC taking over this industry, and what is the fine line that is going to be drawn, or are we going to have a completely new regulatory body? Those are the questions that we're going to get clarity to. And the White House recently has said that, hey, we're regulating stablecoins right now. We're going to regulate DeFi assets, and we're going to regulate NFTs by the summer of 2023. So there's actually specific deadlines that are laid out in different sectors in the industry that they said they are going to be regulating. Okay. And we're already seeing those institutions come in, and they're coming in the safest way. And the only way that they're going in is in the way where we already have some clarity and some certainty. So can you imagine when the entire industry has regulatory clarity? What do you think that's going to do for the total market cap, for the prices of whatever assets that you're holding, right? It doesn't mean everything is going to go up. It doesn't mean a lot of things aren't going to go to zero, but the things that have the strong fundamentals, things that you should be doing your research on, things that, you know, that actually have utility, things that interest the institutions because they provide value to their clients. Those are the things that you should be looking at and considering having a piece of your portfolio, because I don't think there has ever been a better time in the history of investing, especially, obviously I'm not 97 years old, okay? But it's very, very rare for an asset class to come out of zero. It just popped out of the soil. Okay, we've got a brand new asset class that we can invest into that is exponentially growing. That is so rare. And it's so rare to have this massive bear market with ultimate FUD and all the nonsense going on. Meanwhile, the institutions, utility picking up, regulation coming in. You should be thankful that prices are down this far, because all the bear market is doing is giving you more time to do your research and potentially diversify into this industry, okay? You need to be asking yourself, hey, here's my total investment portfolio. Here's how much risk and how much growth I want to have. And here's, maybe I want to allocate 3%, 10%, 20, 50% into this industry. It all depends on your own goals. You got to have self-awareness. You got to understand where we're at. You need to have a perspective. And more importantly, you need to make sure your actions align with that perspective. Anyways, hope you got some value from this video. Hopefully the sun isn't making my face look like I'm Darth Vader. I may have to put on some sunscreen after this, or I'm just going to walk around with half of my face being red and the other half being white as a kite. Thanks so much for watching, and I'll see you here on this next video.